Anticipated 25% revenue increase across 4 sectors: healthcare, retail, education, and logistics by Q4 2025. Date: March 5, 2025. Executive Summary. By the fourth quarter of 2025, a significant revenue increase of 25% across the healthcare, retail, education, and logistics sectors is anticipated. This growth is driven by transformative trends, competitive strategies, and economic conditions that emphasize digitalization and personalized experiences. Major global players are preparing to adapt to the evolving landscape, each responding to unique sector challenges and opportunities. 1. Healthcare sector. The healthcare industry is focusing on financial sustainability and improving patient affordability. Following the disruptions caused by the COVID-19 pandemic, healthcare providers are seeing a rebound, with an 8% increase in net hospital operating revenue expected in 2024. However, disparities exist between financially robust and vulnerable organizations. Key strategies for growth include mergers and acquisitions (M&A). Healthcare organizations are increasingly pursuing M&A to fortify services and expand operational capabilities. Shift to non-acute care. Providers are moving care to outpatient settings, reflecting a broader trend towards more accessible healthcare solutions. Telehealth innovations. The demand for telehealth services continues to rise, with hospital-at-home services projected to grow at a staggering 119% annually until 2029. Challenges remain, including labor shortages, rising costs, and an evolving insurance landscape as the population ages and transitions to Medicare. 2. Retail sector. The retail sector is undergoing a radical transformation from mass-market approaches to micro-targeted strategies aimed at personalized consumer experiences. Executives project mid-single-digit growth in 2025, driven by digital commerce investments, a significant emphasis on enhancing online shopping experiences. With nearly 70% of executives planning to adopt AI for personalized shopping. Loyalty programs. Strengthening loyalty programs and enhancing omni-channel experiences are top priorities for retailers seeking to engage consumers effectively. Social commerce. Retailers are leveraging platforms like TikTok and Instagram to connect with younger audiences, with social commerce expected to increase significantly. The logistics aspect of retail is particularly promising, with a $557.1 billion revenue opportunity anticipated by 2030, driven by e-commerce growth and efficient last-mile delivery solutions. 3. Education sector. Although less detailed than other sectors, the education industry is also expected to follow the trend of increased digital engagement and personalized learning experiences. Institutions are likely to invest heavily in technology to enhance student engagement and optimize operations, mirroring trends observed in retail and healthcare. 4. Logistics sector. The logistics sector stands to gain immensely from the shift towards omni-channel retail. Key growth drivers include technological advancements. Innovations in automation and robotic solutions are set to enhance operational efficiency. Omnichannel strategies. The logistics market is expected to grow at a CAGR of 10.8%, reaching $557.1 billion by 2030, fueled by the demand for seamless shopping experiences. Last-mile delivery focus. Enhanced last-mile delivery solutions are crucial as consumer expectations for fast and convenient services rise. Overall economic context. The optimistic revenue projections across these sectors are supported by a positive economic outlook. Consumer spending is expected to rise by 3.1% in 2025, bolstered by easing inflation and a robust labor market. Enhanced purchasing power and decreasing borrowing costs are anticipated to further drive consumer confidence and spending. Sector-specific insights. Healthcare. The healthcare sector's focus on sustainability and affordability comes amidst rising operational costs and labor shortages. Innovations in care delivery, particularly in telehealth and outpatient services, are critical to addressing these challenges. The anticipated growth in hospital at-home services underscores the shift towards more flexible care models. Retail. The retail industry's shift towards digitalization is characterized by a move from mass-market strategies to hyper-personalized consumer engagement. Retailers are investing heavily in AI and automation, with many executives expecting substantial growth through enhanced loyalty programs and digital commerce. The sector faces challenges related to increasing operational costs and evolving consumer preferences. Education. While specific data on the education sector is less comprehensive, it is clear that technology will play a significant role in enhancing learning experiences and operational efficiency. Institutions are likely to adapt to the trend of increased digital engagement, aligning closely with developments in retail and healthcare. Logistics. The logistics sector is poised for significant growth, driven by technological advancements and the increasing demand for efficient delivery solutions. The projected market growth highlights the importance of embracing innovative distribution strategies to meet evolving consumer expectations. Competitive responses. 5 major global players across these sectors are expected to respond proactively to the projected revenue growth. Their strategies will include: 1. Investment in technology, a focus on AI and automation to enhance operational efficiency and customer engagement. 2. Mergers and acquisitions, pursuing strategic partnerships and acquisitions to expand service offerings and market reach. 3. Innovative care models in healthcare, adapting to shifting consumer demands through telehealth and outpatient services. 4. Personalized consumer experiences in retail, leveraging data analytics to tailor shopping experiences to individual consumer preferences. 5. Enhanced logistics solutions, investing in technology to streamline supply chain operations and improve last-mile delivery services. Conclusion. The anticipated 25% revenue increase across the healthcare, retail, education, and logistics sectors by Q4 2025 reflects a profound transformation driven by digitalization, personalized experiences, and competitive strategies. While each sector faces unique challenges, the common thread of technological integration and consumer-centric approaches will define the competitive landscape leading up to 2025. The successful adaptation of major players will be pivotal in navigating these changes and capitalizing on the projected growth opportunities. The anticipated 25% revenue increase across the healthcare, retail, education, and logistics sectors by Q4 2025 is primarily driven by transformative trends, competitive responses, and economic conditions. Below are key insights highlighting counterintuitive information within the provided content. Healthcare sector. 1. Financial disparities. While the overall financial health of healthcare organizations appears to be improving, there is a growing disparity between financially strong and weak organizations. This means that while some hospitals may experience significant revenue growth, others may struggle to survive, countering the expectation that recovery benefits all equally. 2. Innovations in non-acute care. The anticipated growth in hospital at-home services, projected at 119% annually, underscores a significant shift towards non-acute care. This is counterintuitive, as many might assume that traditional inpatient care would remain the primary focus post-pandemic. 3. Rising costs versus reimbursement rates. Despite improvements in net hospital operating revenue increased by 8% in 2020, for the long-term outlook is clouded by rising costs outpacing reimbursement rates. This suggests a paradox where revenues can rise while financial sustainability deteriorates due to cost pressures. Retail sector. 1. Mass to micro approach. The retail sector's shift from a mass marketing strategy to a micro-targeting approach implies that despite the digitalization push, many retailers may struggle with legacy systems that complicate this transition. The expectation that digitalization will uniformly benefit all retailers is misleading. as those with outdated systems may find it challenging to adapt quickly. 2. Value over loyalty. The trend indicates that consumers may prioritize price over brand loyalty, which contradicts traditional marketing notions that brand loyalty is paramount for sustained growth. Nearly 60% of retail executives expect consumers to increasingly shop based on price rather than loyalty, urging a re-evaluation of long-term marketing strategies. 3. Consumer behavior changes. Retail executives anticipate that consumers will make more frequent shopping trips with smaller basket sizes, which defies the common assumption that consumers prefer larger infrequent shopping trips. This shift could challenge inventory and supply chain management practices. Education sector. 1. Investment in technology versus academic outcomes. While the education sector is projected to invest heavily in technology to enhance student engagement, there is skepticism about whether these investments will translate into improved academic outcomes, as seen in other sectors. This reflects the counterintuitive idea that increased spending on technology does not guarantee better results. Logistics sector. 1. Omnichannel logistics growth. The projected growth of the retail logistics market, fueled by the shift to omnichannel retailing, may create operational challenges as companies attempt to integrate disparate systems. This suggests that while growth opportunities exist, they are accompanied by complexities that could hinder profitability. 2. Last-mile delivery expectations. The increasing demand for efficient last-mile delivery solutions may seem beneficial, but it also raises costs and logistical challenges for retailers, contradicting the assumption that enhanced consumer convenience will always lead to higher profitability. Overall economic context. 1. Consumer spending versus economic pressures. The projected 3.1% rise in consumer spending in 2025, supported by easing inflation and a strong labor market, may mask underlying economic pressures such as rising costs of living and borrowing. This presents a counterintuitive view that while consumer confidence appears high, it may not reflect long-term economic stability. 2. Impact of easing inflation. The expectation that decreasing inflation will boost consumer purchasing power is counterintuitive, given that many consumers are still facing higher prices than pre-pandemic levels, suggesting a disconnect between macroeconomic indicators and individual consumer experiences. 3. Mergers and acquisitions. The report suggests that more than half of retail executives plan to invest in mergers and acquisitions. This indicates a growing recognition of the need for scale and efficiency. However, it also poses risks, as not all mergers lead to successful integrations, contradicting the notion that consolidation always yields positive outcomes. Conclusion. The anticipated revenue growth across healthcare, retail, education, and logistics sectors by Q4 2025 is met with a variety of counterintuitive dynamics. While sectors are expected to grow, inherent challenges related to financial disparities, shifting consumer behaviors, and operational complexities suggest that the pathway to success will be far from straightforward. Organizations must navigate these complexities to harness the growth opportunities, effectively indicating that simply following trends may not suffice for sustainable success. The report anticipates a 25% revenue increase across four key sectors: healthcare, retail, education, and logistics, by Q4 2025, driven by various transformative trends and competitive responses. While many aspects of this growth are highlighted, several important elements are often overlooked which can significantly impact stakeholders across these industries. 1. Disparities in healthcare financial health. One critical yet overlooked aspect of the healthcare sector's growth is the widening financial disparity between strong and weak organizations. While the report notes an overall increase in net hospital operating revenue by 8% in 2024, it highlights that this growth is not evenly distributed. Many healthcare systems, particularly those in rural areas, face severe financial challenges, with some at immediate risk of closure. This disparity is significant because it suggests that while the healthcare sector may experience growth, the quality and accessibility of care could deteriorate for populations served by financially unstable institutions. This could lead to increased health inequities as those in underserved areas may have limited access to necessary services. 2. Transition from mass to micro in retail. In the retail sector, the shift from a mass market approach to a micro-targeted strategy is crucial but often underappreciated. The report discusses how retailers are increasingly focusing on personalization and consumer engagement through loyalty programs and AI. However, the operational challenges tied to this transition, such as outdated technology and fragmented consumer data, are less frequently addressed. Retailers that fail to modernize their systems may struggle to compete, leading to a potential loss of market share to more agile competitors. The emphasis on AI and automation presents both a significant opportunity and a challenge, as retailers must invest heavily to keep up with technological advancements while managing costs. 3. The role of last-mile delivery in logistics. The logistics sector's anticipated growth, propelled by the rise of e-commerce and the importance of last-mile delivery solutions, is another critical point. While the report notes the projected revenue opportunity of $557.1 billion in retail logistics by 2030, it does not fully explore how last-mile delivery innovations could redefine customer expectations and operational efficiencies. As consumer demands for faster delivery escalate, logistics companies must adapt their strategies accordingly, which may include investing in automated delivery systems or enhancing their supply chain networks. Failure to address these demands could lead to diminished customer satisfaction and loyalty, impacting long-term revenue growth. 4. Economic factors influencing consumer spending. The report mentions a positive economic outlook, with consumer spending projected to rise by 3.1% in 2025. However, it is essential to consider the potential volatility of this outlook, particularly in light of geopolitical tensions and fluctuating inflation rates. While decreasing borrowing costs may boost consumer confidence, rising costs in essential goods could counteract this optimism, leading to a more cautious consumer spending environment. Companies must remain vigilant and prepared for shifts in consumer behavior driven by economic uncertainties, as these changes could significantly impact revenue projections. 5. Innovations in education. While the report provides less detail on the education sector, it is significant to note that the anticipated growth is closely tied to digital engagement and personalized learning experiences. The education sector's ability to adapt to these changes will be crucial in ensuring access and equity in educational outcomes. Institutions that invest in technology to enhance learning experiences may gain a competitive advantage. However, those that do not may struggle to attract and retain students, particularly as younger generations increasingly demand more personalized and flexible learning environments. 6. Strategic mergers and acquisitions. The report highlights that many sectors will see increased mergers and acquisitions (M&A) activity as companies look to scale operations and enhance capabilities. This is particularly relevant in the healthcare and retail sectors. However, the potential implications of these M&A activities, such as reduced competition and market monopolization, are critical considerations that may be overlooked. Stakeholders must evaluate the long-term impacts of consolidation on service delivery, innovation, and pricing strategies. 7. Cybersecurity as a growing concern. As organizations across these sectors increasingly rely on digital solutions and data-driven strategies, cybersecurity risks become more pronounced. The report touches on the importance of cybersecurity in healthcare, noting the rise in attacks and the financial implications of breaches. However, the broader implications of cybersecurity threats across all sectors, including retail and logistics, are often underemphasized. As companies digitize operations, they must prioritize robust cybersecurity measures to protect sensitive information and maintain consumer trust. The failure to adequately address these risks could lead to significant financial and reputational damage. Conclusion. The anticipated revenue increase across the healthcare, retail, education, and logistics sectors presents significant opportunities for growth. However, Stakeholders must not overlook the critical challenges and trends that could shape the outcomes of this growth. Addressing disparities in financial health, embracing technology, adapting to consumer demands, understanding economic fluctuations, and prioritizing cybersecurity will be essential for organizations aiming to thrive in the evolving landscape leading up to Q4 2025. By recognizing and addressing these often overlooked aspects, companies can position themselves for sustainable success in an increasingly competitive environment. The anticipated 25% revenue increase across the healthcare, retail, education, and logistics sectors by Q4 2025 represents a significant shift in the business landscape. The following 4 points summarize the most valuable aspects of this trend. Providing a foundation for in-depth analysis and discussion. 1. Innovations in digital transformation in healthcare. The healthcare sector is experiencing a paradigm shift towards non-acute care settings and embracing technology to improve patient affordability and operational efficiency. Key innovations include the expansion of telehealth services and hospital-at-home models, with the latter projected to grow at a remarkable 119% annually until 2029. This shift is not only responding to consumer demands for more accessible care but also addressing the growing pressure on healthcare systems to manage costs effectively, especially with an aging population transitioning to Medicare. Mergers and acquisitions (M&A) are anticipated as critical strategies for organizations aiming to enhance their financial health and service delivery models. 2. Retail's move towards personalization and omnichannel engagement. The retail sector is rapidly transitioning from mass-market approaches to hyper-personalized experiences driven by digital transformation. Executives in retail anticipate mid-single-digit growth in 2025, primarily fueled by investments in loyalty programs, enhanced digital commerce, and omnichannel strategies. The integration of artificial intelligence, AI, and automation is crucial, with nearly 70% of retail executives planning to adopt AI capabilities to personalize shopping experiences. This shift reflects a broader trend of engaging, value-seeking consumers who prioritize price and experience over brand loyalty. As e-commerce continues to dominate, retailers are also focusing on optimizing logistics to meet the demands of last-mile delivery, presenting a significant revenue opportunity. 3. Logistics sector growth driven by e-commerce and technological advancements. The logistics sector is poised for substantial growth driven by the booming e-commerce market and the necessity for efficient distribution systems. The retail logistics market is expected to reach $557.1 billion by 2030, growing at a CAGR of 10.8%. This growth is supported by advancements in technology, including automation and data analytics, which are enhancing operational efficiency. The rising importance of last-mile delivery solutions is creating new opportunities for logistics providers to offer innovative services that align with the evolving retail landscape. The emphasis on omni-channel strategies will further catalyze this growth as retailers seek to provide seamless shopping experiences across various channels. 4. Economic context and consumer spending trends. The overall economic outlook for 2025 is positive, with consumer spending projected to rise by 3.1% due to easing inflation and a strong labor market. Enhanced purchasing power and decreasing borrowing costs are anticipated to boost consumer confidence and drive spending, particularly in sectors like retail and healthcare. However, challenges such as rising costs, labor shortages, and shifts in insurance landscapes in healthcare must be addressed to sustain this growth. The anticipated revenue increase across sectors reflects not only the recovery from the pandemic but also the strategic responses of major global players adapting to changing consumer behaviors and market dynamics. Conclusion. The projected revenue growth across healthcare, retail, education, and logistics sectors underscores a significant transformation driven by technological innovation changing consumer preferences and economic conditions. Each sector is responding uniquely to the challenges and opportunities presented by this evolving landscape. A deeper analysis of these trends will reveal insights into competitive strategies, operational efficiencies, and consumer engagement that will shape the future of these industries leading up to Q4 2025. 1. The Industrial Revolution 1760 to 1840. The Industrial Revolution was a pivotal period that transformed economies from agrarian to industrialized. It marked a major turning point in history affecting almost every aspect of daily life, including the rise of factories, urbanization, and the introduction of new technologies like the steam engine. Major players such as James Watt steam engine, Eli Whitney cotton gin, and Henry Bessemer steel production led innovations that increased productivity and efficiency across various sectors like manufacturing, transportation, and textiles. This period saw significant competition among industrialists, leading to rapid economic growth and the establishment of new social classes. 2. The dot-com bubble 1995 to 2000. The late 1990s saw a surge in the use of the internet, leading to the rise of many technology companies, particularly in e-commerce and digital services. Companies like Amazon and eBay rapidly grew, and investors poured capital into internet-based businesses, anticipating massive revenue growth. The competition among tech firms intensified, leading to inflated stock prices and widespread speculation. However, the bubble burst in 2000, resulting in significant losses for investors and the collapse of many companies. Despite the downturn, the technology sector eventually rebounded, leading to long-term changes in how businesses operate, particularly in retail and logistics. 3. The global financial crisis 2007 to 2008. The financial crisis was triggered by the collapse of the housing bubble in the United States, leading to significant declines in consumer wealth, severe disruptions in financial markets, and a sharp rise in unemployment. Major financial institutions faced bankruptcy, leading to widespread economic recession. The crisis prompted a re-evaluation of financial regulations and practices, resulting in increased scrutiny of banking and lending practices worldwide. The responses to the crisis included government bailouts of key institutions and sweeping reforms in financial regulations, impacting sectors such as banking, housing, and consumer finance. The crisis led to a prolonged period of economic recovery and significantly altered consumer behavior, influencing sectors like retail and healthcare as businesses adapted to new economic realities. The future outlook for the anticipated 25% revenue increase across the healthcare, retail, education, and logistics sectors by Q4 2025 is underpinned by transformative trends and responses from major global players. Each sector is set to experience growth driven by technological advancements, changing consumer behaviors and economic conditions. Healthcare sector. The healthcare sector is focusing on financial sustainability, patient affordability, and innovative care models. As the industry recovers from the pandemic, there's a noticeable shift towards non-acute care settings. Mergers and acquisitions (M&A) will likely continue as organizations consolidate to gain efficiencies. By 2025, the revenue from hospital at-home services is projected to grow at a 119% annual rate, reflecting a broader shift towards telehealth and outpatient services. However, challenges such as labor shortages, rising costs, and the evolving insurance landscape will persist, necessitating continued innovation and adaptation. Retail sector. Retail is undergoing a digital transformation, moving from mass-market strategies to hyper-personalized experiences. Retailers are expected to achieve mid-single-digit growth driven by investments in loyalty programs and enhanced omni-channel strategies. Approximately 70% of retail executives plan to adopt AI capabilities to improve customer interactions and streamline operations. The rise of e-commerce and social commerce signals a significant revenue opportunity, particularly in logistics, with the retail logistics market projected to reach $557.1 billion by 2030. Retailers are likely to engage younger consumers through innovative marketing and personalized shopping experiences. Education sector. The education sector is embracing digital engagement and personalized learning experiences, although specific projections are less detailed. Institutions are expected to invest in technology to improve operational efficiencies and student engagement. The ongoing trend towards online learning and adaptive educational solutions will likely shape the landscape, addressing diverse learner needs and preferences. Logistics sector. Logistics will experience substantial growth fueled by the rise of omnichannel retailing and technological advancements. The sector is set to grow at a CAGR of 10.8%, reaching $557.1 billion by 2030. Key drivers include the demand for efficient last-mile delivery solutions and the need for cost-effective logistics services. Major logistics players will enhance their service offerings to support the evolving retail landscape, creating opportunities for innovation in supply chain management. Economic context. Overall, the projected revenue growth across these sectors is supported by a positive economic outlook. Consumer spending is anticipated to rise by 3.1% in 2025, driven by easing inflation and a strong labor market. Enhanced purchasing power and decreasing borrowing costs will likely bolster consumer confidence and spending, further fueling growth across all sectors. Competitive responses. Major global players in each sector will respond to these trends by investing in technology, enhancing operational efficiencies, and adapting their business models. The integration of AI automation and data analytics will be crucial for organizations aiming to personalize experiences and optimize operations. As competition intensifies, companies will need to differentiate themselves by focusing on customer experience, innovative service delivery, and strategic partnerships. Conclusion. The anticipated 25% revenue increase across healthcare, retail, education, and logistics sectors by Q4 2025 reflects a convergence of technological innovation changing consumer preferences and economic resilience. While challenges remain, the emphasis on digital transformation, personalized experiences, and operational efficiency will define the competitive landscape. As organizations adapt to these shifts, their ability to leverage technology and respond to evolving market dynamics will be critical to their success in the coming years.